Here to review this week's earnings, David Crawford, fund manager at Octopus Investments. Hi, David.
Morning.
I mean, it definitely has been the week for the banks, predominantly the UK banks, and they've all done rather well, haven't they?
Yeah, I mean, Lloyds has been really positive. I mean, the shares are now sort of breaking into new territory. You know, they've been near 70p before, but now they've gone through that. And some people are saying the shares are going to over £1 or £1.50. So that's pretty exciting stuff for a big company in the FTSE.
Does it all get better from here, though, David? I mean, you heard my piece there. There's a lot of potential dark clouds on the horizon for not just the UK banking industry, but for banks across the globe.
Yeah, I mean, I think the biggest positive for the banks is the yield curve, where they can sort of borrow cheaply and lend at quite good rates. It's not particularly competitive at the moment. Obviously, Lloyds have got a massive market position, so that's the biggest driver, as well as the fact that the bad loans, sort of a bit of right back, or things aren't as bad as they thought. There isn't that much loan growth going there because the economic activity is not great. But I don't think they really need that in many ways, because the shares are on sort of just over 1 times book. Traditionally, they've traded, Lloyds has traded as high as sort of 2 times book or more than that. So there's quite a bit to go for, even if you don't see massive growth from the.
Is Lloyds your favourite pick in the UK?
I think it is. Yeah, I mean, Lloyds was always previously sort of one of the highest quality names with high returns on equity. Obviously, the HBOS deal, which has sort of diluted that, but I think as a structure, it looks really quite exciting for the future in terms of its market position. Whereas RBS has still got more legacy issues. It obviously had a lot more problems than Lloyds did.
Are you not into the HSBCs and the Standard Chartered? You know, a bit of emerging market exposure.
Yeah, I mean, I find Standard Chartered maybe a little bit racy in terms of its valuation, although it's obviously doing really well. HSBC I own. I mean, that's more pedestrian in one way. Obviously, it's got exciting growth, but because it's already kind of priced in to an extent, it's not got the same sort of gearing on the upside as something like Lloyds would have. What
have you learned then from talking about the earnings season in total? What are you taking away from the earnings season on both sides of the Atlantic?
I mean, it's all relatively positive, but I mean, the market, for me, I've got to look ahead, and it's trying to work out whether we're getting close to peak earnings for some of these things, or actually are we in the mid-cycle? And I guess where I'd be a bit more cautious would be some of the more cyclical sectors that are facing Europe or US, where we talked about a more anemic recovery. I don't see. I think it's possible that some of the expectations going into 2011 are probably too high for some of these companies. But obviously those who've got a more of an emerging market focus may well be quite good, because lots of the growth is going to be from China.
How do we make money, David? Come on, that's the $60 billion question.
I think, well, the market will probably be reasonably volatile, moves up and down, so you've got to try and, when everybody gets a bit complacent saying it's going to be all right, you've probably got to be selling or going short, and then everybody gets a bit more bearish, you buy, and that's been the trend for most of this year. That will probably continue, though I think the overall trend is probably still up.
So you're a contrarian, are you? Is that the way forward?
I think you've got to have a longer-term view, but in the short term, you've got to act in quite a contrarian fashion, because people will get, sucked into stories, and then they'll be too late, and then there'll be some disappointment, because there are lots of headwinds which will come out, and then people will start worrying again. They say bull markets climb a wall of worry, so it's at those moments of worry you want to buy, but sell when everybody's feeling pretty bullish.
Good advice. Thanks, David. Have a good weekend. David there from Octopus Investments.